Hello, this is Craig Larson with Larson Financial Advisors for the Market Minute on April 18th, 2016. Well, it's been a while since my last video. I'm overdue for an update, and finally we had some rankings changes again. So I'm going to go back and replay a few things here for you briefly. And for the new people watching, by the way, when I talk about rankings, we're basically ranking the 6 broad asset classes of investing, which are U.S. stocks, international stocks, commodities, bonds, foreign currencies, and cash equivalents like money market funds. And what I have the computer do is treat this like a sports tournament. So every team arm wrestles the other teams every day, and we just tally the points. And this is for long-term investors, so these rankings don't change much. And so what we've had in the last 6 months is U.S. stocks was in a commanding lead with well over 100 points more than the second place category. In fact, for years it was like that. And then in January, U.S. stocks got crushed in the sports rankings and fell to third place. And they've been able to sort of sneak back into second place now over the last couple of weeks, not because they're earning a lot of new victories and points, but because cash has been losing points. So the rankings right now are bonds are in first place, U.S. stocks are in second place, and cash equivalents are in third place. And out of about 1,070 total points in the sports tournament, the difference between first, second, and third place is only 22 points. So a very narrow range here in the market. So very interesting there. Now the S&P 500 is back to the point it's been at about 6 times, and it's at the same level that it was since November of, or where it was on November of 2014. So the stock market's basically gone nowhere for about 17 months, which has been very frustrating for a lot of investors. And now we're up at a point of resistance. So there's been a resistance band at about 2100 on S&P, and the lower support band has been about 1800 on the S&P 500 index, and it's been just whipsawing between those 2 points violently, as you've probably noticed, for the last year and a half. So we're getting up towards the top of the band, towards the resistance. Will we get a breakout to new highs, which would be very bullish, maybe signaling that the sideways was just a consolidation in an overall bull market? Or will we start fading and dipping down towards that lower level again? And if we break the lower level, that will confirm that we're in a bear market. So I would anticipate that this decision point is probably going to come in the next couple of months. And we're now very close to the seasonally weak half of the stock market year, which starts May 1st. So if you go back and look at, I think it's the May 2013 video in the archives, we talk about seasonality and what a powerful effect that often has in stock markets. So we're getting to a critical juncture here. Very interesting dynamics in the market. So if you have any questions about how to handle a range-bound market, how to manage risk, what positions are working, please call or email me and I'd be glad to help. Thank you for tuning in, and I look forward to coming to you again in the next couple of weeks.